This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome to your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is July 2nd, 2020, and this is show number 68. Nick, we got our unemployment numbers in. It's a little bit of a mixed bag, but overall highly positive, isn't it?
Yeah, much better than expected. I mean, it came in at 4.8 million, which was better than the expectations of 3.5 million. So that's definitely a positive. It looks like the June unemployment rate is 11.1% versus 12.6%, which is another positive. The one thing I would say, though, is you got to always watch the market reaction. And so far, the markets have reacted positive, but as we speak here, they have faded a little bit, and a lot of the early gains have evaporated. So we definitely want to see where we close today because we're going into a 3-day weekend, and I think that's pretty important.
So it's important when you have a holiday weekend where the market lets off?
Well, right now you have to think with all of the negative media attention that we're getting about COVID-19 cases rising, even though deaths are falling, we are, you got a lot of fear out there, and who's going to want to hold into the weekend? That's the big study right now. Are people willing to hold stocks into the weekend, especially a 3-day weekend? Are they willing to keep them? And if they do, that's a positive sign. If they're not, that's obviously a negative sign. But we're getting bombarded now. I mean, California closing up bars, and you're seeing other places, mask requirements everywhere. I mean, I've never seen anything like this. It's just like pedal to the metal of wave 2 here. Even though when you look at the amount of deaths and the amount of testing that's going on, you would think the markets people would be celebrating it in the media, but it's really just getting pounded here as bad news.
Yeah, that's kind of shocking that the deaths are down, and yet it's so interesting because I can ask you one question and know exactly where you get your information. I can ask you, do you think COVID, the situation is getting better or that the worst is yet to come? And if you say it's getting better, then I know you're probably going to independent news sources other than the lamestream media. If you say it's getting worse and the worst is yet to come and the second wave and all this, I know where you're getting your info from.
Unfortunately, you're 100% correct, Kerry, and that's where we are in this stage of the game. But the masses will always watch the lamestream media, as you say.
Yeah, they're pretty lame. But the job numbers, I mean, that's coming back way faster than any of you out there could have anticipated, right?
I think it has come back a lot quicker, and with the companies and businesses reopening, that's what you would kind of expect. The problem here that we're facing right now is that you're getting a lot of shutdowns again, and that will hurt a little bit. And you could see that really is reflected in the weekly initial claims report, because that was 1.427 million versus 1.35 million, which was the expectation. So that's not a positive. A lot of that is due to people wanting to come back to the workforce, not wanting to come back to the workforce because they're making more money staying at home. So, you have to take that into consideration too.
Yeah, well, I think next month will be the tip-off on the real trend, because the 600 per week runs out, and then we're left with who really is structurally unemployed here.
Yeah, I agree with you, and I think that's going to be the real challenge, the real test, really, going forward. But I'd like to not even see it come to that. I'd like to see to see the country just reopen, and that's it. And you know what? We'll manage everything going forward. But to shut down again, and the masks. I saw a woman in the supermarket pass out wearing a mask. I just think the science of things is so distorted lately. It's really, really, a terrible thing. And when we're getting, like I said, the mainstream media is really just harping on the amount of new cases with all the testing going on.
Yeah, there is no science behind any of it. That's the problem. Who said that 6 feet is the ideal distance for social distancing? Yeah, No, there's no science. There's no studies on it. In the UK, it's 3 feet. In other places, it's 4.5 feet. So, really.
I only know 6 feet is the where they're going to put my casket when it's all said and done, I believe, right?
That's it. That's it for sure. So, getting back to the markets, looking at gold and silver, they're up today, even in spite of a very positive, on the surface, non-farm payroll report. What do you make of that? Usually, gold and silver get slammed on these days.
Yeah, you're right. Normally they would get slammed on a positive news report like this, but they're holding up really, really well. In fact, gold futures right now are up $7. It's not a huge move, but it's positive. And like you said, normally they would get hit pretty hard today. So precious metals, there's really no backing off, it seems. And that's okay with me. I just want to see them go sideways. As long as they go sideways, we're going to get a heck of a trade in there down the road.
Yeah, agreed. And we know it's coming. The stocks have been holding up surprisingly well the past few days. Gone up, they're doing pretty good.
When you look at the gold miners, they've been almost exceptional. Right? They've had a really good rally since the start. I would say since the 15th of June. I thought they were going to back down a little bit more, but they've been rallying up ever since. Now, they're not at new highs. The GDX, I should say, is not at a new high, but it's very close to a new high. So I wish it would just go sideways from here, and we'll get a great trade off on the GDX as well, because gold miners are going to go a lot higher down the road.
Yeah, for sure. And I'm looking at, at the initial stages of a precious metals bull market. Obviously, the big producers, the Barricks, the Newmonts, they're the ones that get the immediate jolt to the bottom line because they're actually producing millions of ounces. Every $10 it goes up per ounce, it makes a big difference in their bottom line. Now we're starting to see the smaller, the juniors, the explorers, the developers, the ones getting near to production. They're participating in this rally, and that's a great confirmation sign.
Well, the junior miners are actually leading right now. So if you take a look at the GDXJ, which is an ETF to follow the junior miners, you'll see that that's making new all-time highs right now as we speak. Or not new all-time highs, I should say. It's making new multi-year highs. 2016, I believe the GDXJ traded as high as 52.50. Right now, the GDXJ is trading at 50.40. So we're really, really close to new all-time highs on the GDXJ.
Yeah, and that's amazing because the so-called experts, that aren't in the sector, the general economic experts, and I use the experts in quotes, of course, never saw any of this coming.
No, they never saw it coming. But, for a trader, this is 101, right? So you got a central bank printing, trillions of dollars, and not just the Federal Reserve, but you have the ECB, the Bank of Japan, and we could go on and on with the rest of them out there. What does that do to gold? It just helps to lift gold. That's why you see even Bitcoin doing as well as it has been doing. But in my opinion, gold and silver are still the place to be going forward. As far as trading goes, yeah, I'd like to see a pullback in them. I'd like to see them, because I don't like to pay up for things. And if they do that, there's going to be one heck of a trade going forward over the next couple of years.
Yeah. I think you are correct. And, the guy from Kitco, who's an analyst there, I think I mentioned, I had him on the show last summer, and his prediction was gold would finish up the year at 1550. It ended up at 1555. That's close enough. Now he's saying 1911. I personally think he's going to be a little shy myself. I think we're going to finish just below the record price, the record closing for.
Well, I can't tell you where gold's going to finish by the end of the year. I have no clue. But what I will say is I'll have a clue when I see that pattern.
Yeah. Yeah. So, so you mentioned one thing, a technique that you use, which is watching the close before a long weekend, a holiday weekend, to get an idea of where the real money in the market, what it's doing, not what it's saying. Can you give us a couple tips on how to identify a market top or a market bottom, since you've been so spot on for years now?
Sure. So, while it's never perfect, one of the things that I like to look for is for tops and bottoms in market is high volume around those highs and around those lows. So I'll just talk about the March lows for the S&P 500. And what you'll notice, though, coming into it about a week before the low was made, we really started to trade massive, massive volume. I think on, say, March 12th, we traded 392 million shares in a day in the spiders. That's very, very high volume. Spiders generally trade about 100 million or less. And then, the preceding days after that, we were right in that same range. And when you get massive, massive volume, sometimes you might want to even look at a bigger time frame chart, meaning a weekly chart, and you'll get the volume there as well. And that will give you a very good indication that the markets are what we call capitulating. And when that happens, you know that a bottom is near, and that's where you start to look for opportunities for a reversal. And you could do that on the upside as well as on the downside. Sometimes when you're looking at the upside, it's a little bit tougher to do because what we get is rounded tops. Usually on downside moves, we get exhaustion bottoms, but rounded tops are a little bit harder to identify. But I'm going to be talking about that in the seminar that I'm doing in about 2 weeks. So I believe the seminar is going to be on a Thursday night on the 16th of July, and I'm going to be talking about all the techniques that I use, and it's many techniques that I use to find tops and bottoms in all types of markets, bull and bear markets. So I hope traders that are interested in that. I think this is the reason why I'm doing this seminar is because we're in a time period where this is just so important. And the next few years, you'll be using all of these techniques that I'm showing you if you learn them properly, and you can use them in all markets as well.
I just wonder if the social unrest is going to diminish after the election or increase. And I guess a lot of that depends upon who wins, but there's a cycle involved here. We see it all over the world, social unrest taking place.
I already have the answer for that, and it doesn't even matter. It will increase. And, you can chart anything. And if you just look at the pattern that's here, we haven't not hit the parabolic move yet. And social unrest will hit a parabolic move. And that has not happened yet. And it's not scheduled to happen until we get to somewhere early next year.
Wow. And so the worst, as they used to say in Batman, the worst is yet to come.
That's unfortunate, but it is correct.
Yeah, well, sometimes these things have to burn themselves out, and we've seen it before, but these are organized, orchestrated. Maybe the government really is doing something about it. I always thought one of their primary responsibilities was to protect us from enemies within and without, and it doesn't look like they're doing such a great job right now.
Well, I have to be honest, Kerry. I've never seen anything like this in my lifetime. And that's why I'm so grateful that I have been a chart reader, and I'll continue to read the charts and just let the charts guide me. Yeah,
and it's worked all these years for you. So the charts, and it's amazing that in the face of all of this social unrest, all of these negative things, COVID-19, that the market can stay where it is and has retraced much of the losses of March.
Yeah, I mean, it's been a tremendous move. I mean, we've retraced about 80% of the declines, and that's quite something when you think about it. Now I just wish that we would get through this virus story, but I don't think that's going to happen anytime soon. But I just wish that people would start to look at, if they're going to use the news, and if that's what you're going to do, just try to really decipher what's true news and what's good news and what's real information versus the propaganda that we get fed every day. But I can't decipher it, so I use charts.
Yeah, the fake news, it's a bit overwhelming, but just understand better days are ahead, and we'll get through it somehow, some way. And, externalities, events can happen that will literally make everyone forget about everything. They can be so horrible. I'm talking about the Three Gorges Dam, the potential collapse. If that happens, all of a sudden, nobody's thinking about anything about social unrest or anything else, because that will be the story of the millennia. But hopefully it won't happen. But, the Chinese quality in these public works projects, kind of like a kitchen renovator in Florida,
Well, I remember how they were putting up houses back in 2006, 2005, 2006. So again, if it's any if they replicated that technique, we have some problems there.
Yeah, and the Chinese drywall, which was loaded with asbestos, all these things. And got to realize they started building the dam, I believe, in 1992. It was finished in 2009. The level of their technical sophistication almost 30 years ago was a fraction of what it is now. And the guy who is really the leading Cassandra of the dam, he was actually worked on the feasibility study for the dam. So he's not just looking at this from the inside, from the outside in. This is a true insider. He also fled the country because they probably would have killed him for saying all this. So anyways, my point is not to be a chicken little about the world is ending, just that you got to keep the perspective of problems in mind, and really just the perspective is so important in the context. What seems like the most important thing in the world right now, in a week could be the least important thing that you're not even thinking about. That's really my point. So watch the charts. The charts tell all.
They do, and we'll keep an eye on them. And this is really a very, very challenging time for almost everybody in the world. And it's no better. There's no better time, in my opinion, to learn these charts.
Yeah, totally agree with you on that, Nick. Anyway, we're taking tomorrow off, but make sure you go over to Nick's site, In the Money Stocks. Trading record is there. A lot of other useful info. Twitter feeds at ITMS, at Nick Santiago01, and at Kerry Lutz. Questions, comments, we welcome them, and we'll do our best to answer them as fast as we can. The email address, kl@kerrylutz.com, kl@kerrylutz.com. Just put in the subject line Nick, and we'll make sure that Nick gets the question and can answer it. And on that note, Nick, have a great 4th of July weekend, and we will pick up on Monday.
Thank you, Kerry. Have a great 4th of July yourself.
This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.